Hey guys, sorry, what's going on? This is the game plan. Just having some fun here as we get started on this Tuesday morning. My name is Gareth Soloway, and again, you can see I got a new toy here today to throw around in the studio while we talk about some charts. So, again, as I put that down, I do want to talk a little bit about a couple things. So, number one, in yesterday's broadcast, there was a little bit of a glitch, right? It was just as I was talking about $48,000 on Bitcoin. So jump over here and we're going to redo that. And I just want to make it clear because I saw lots of questions about what the heck was he just going to say. It cut out and then it went right to gold. And what I was going to say is that 48,000 on the Bitcoin chart was actually my ultimate target. It's the 618 Fibonacci retrace. It's also a multiple trend line conversion right there, right? So again, right at this 48,000 level. Now, the reason why this is a concern, so I was talking about this 6 weeks ago, maybe 2 months ago, as a potential upside target on Bitcoin. The problem is, everywhere I look, people are now starting to talk about 48,000 as a target. I've seen 48 to 50,000. That's where it's going. That's what everyone is saying. The one thing I've learned in my 20 plus years of trading is that when everyone talks about a level, it often doesn't happen. So just be aware of that. It kind of basically puts me in a perspective of maybe being a little bit more skeptical that that level will be achieved. But again, bottom line, we have Bitcoin continuing to hold up. Right now, it is hovering just underneath 42,000. And again, if we zoom in on 42,000 here, you can clearly see that, again, we're just pulling back fractionally. Now, again, in terms of being overbought, Bitcoin is short-term overbought. But again, if it consolidates here for a little bit, it's still continuing to see the potential of that spot ETF approval. But I will say this, folks, the higher it goes, and this is something I've learned the hard way in my trading career, the higher it goes into news, the more likely it becomes a sell the news event. So wherever it is, when that news hits, you're going to get some sort of spike. The algorithms will automatically buy, individuals will pile in, but the question is, once that initial pop occurs, will it reverse to the downside? And the more we go higher on this, the more I anticipate that happening. So again, folks, just a warning there on what Bitcoin could do. All right, quickly just going into this chart, guys. This is a great chart of Bitcoin dominance. Now, the reason why I want to hover on Bitcoin dominance is because it's something I said recently. All right, when Bitcoin dominance was right into this level right here, I said, guys, alts are topping here, and we're going to see Bitcoin start to take the lead. Now, you might say, well, how did Gareth know that? Why did he think that? And the answer is very simple, and I can explain it in layman terms so that everyone can understand it. If we take a look at the chart, it's very clear what's happened here, right? So again, here's your Bitcoin dominance chart. Notice how we broke above, right? So here was your former pivot point right here. We broke up and then we retraced. Look at how it went right back to that previous high, right? So again, there's a tendency for charts, and I use this term all the time, called the scene of the crime, a retrace to the scene of the crime. You can actually apply it to Bitcoin dominance. So Bitcoin dominance here was sideways consolidation. It broke out. Where did it go? Right back to this former high. So what does that mean? Well, when Bitcoin dominance broke out above this high, where would you expect the retrace to come in? And the answer is back to the scene of the crime. Once it gets to the scene of the crime, it's essentially coming back home, it refuels, and it can go again on its merry way, and that's what you're seeing in Bitcoin dominance here. So again, little tidbits like this are game changers. And again, whether you're a trader in Bitcoin, an investor in Bitcoin, whether you like commodities, whether you like stocks, whether you trade Forex, these little tidbits, they work on every freaking chart. Literally, they work on every chart. So again, important little things to go over there on Bitcoin dominance. Now, I do want to just touch base on a few other things, then we'll get into the stock market in per se. But again, here's your gold chart, guys. Gold again with an epic reversal yesterday. Remember, I explained this in yesterday's game plan. It wasn't like there was a lot of volume on this pop. In fact, if we go to the 10-minute chart of gold, right, and we move back to the pop, and I want to go all the way back here. So again, look at this. The futures on gold opened right here Sunday night. There was literally almost no volume on gold. And so what happened was it started to uptick. It took out this trend line, right? This is your all-time high trend line, and it triggered stops. And when you trigger stops, all right, which are usually put at these key levels like all-time highs, when it breaks an all-time high, what does it do? When you cover a stop or a stop is triggered on a short, it has to buy gold. And so what you saw was an initial, these are 10-minute candles. This is all this is, 10-minute candle. 10 minutes up, and that broke, and then 20 minutes up, and that was it. So literally the entire insane move up on gold there was done on no volume almost, and it was done in such a quick manner that, again, it was just because stops when they're triggered on shorts, the stops in the programs, they don't say, oh, well, I don't want to pay up here and cover my short up here now. It's too high. The computer just is like, get out, get out, get out, cover short, cover short, cover short, and it doesn't care about price. And so it has a tendency in thin volume to create these insane candles, and then look at what happened. Basically, after that, we just came all the way back in, and gold came back below that level. Now, again, thinking about it logically, does it make sense that gold now is done? No. The answer is, of course, it's not. Yes, it has a topping tail, which could tell us we could head down a little bit lower. I talked about this yesterday. Maybe we go back to something like this right here, right around 2,000. I, in fact, think 2,000 is now your support on gold. But again, ultimately, I do expect us to eventually push back up and go higher. Quick check-in on natural gas, guys. Remember, we hit the 618 Fibonacci level yesterday. If we throw in the 200 moving average, and again, I wish this 200 was a little bit different in color. Let me try to shift that around here. And again, I don't mean to do that while in the midst here, but there we go. It looks like we were able to do it right there. So we have our yellow 200 moving average. This is also the 618 Fibonacci level, and natural gas is finally starting to catch a bid. Now, again, catching a bid today doesn't mean anything, right? It's nice to see, but as a technician, you need to see a good update and then follow through. In other words, the bears are in full control of natural gas. Today's uptick is good to see, but we need to see a strong natural gas day and follow through for the bulls to take control again. All right. So that's where we stand on that front here, guys. And again, what I want to do now is rotate over to this chart over here. We're going to quickly start on the Russell. The Russell is continuing to outperform. And this has been remarkable, guys, because, again, if you look at the performance in Bitcoin, it's following the risk-on asset of essentially the Russell. So again, think about this. You have Microsoft, you have Apple, you have Google, you have all these other big cap, mega cap, trillion-dollar companies. Those have actually been selling off. Those have been a store of safety. Those in the world of stocks, those mega caps are the equivalent of gold. It's a store of safety. When you see money rotating out of those mega caps, it means it's risk on, and we've seen the Russell, which is 2,000 companies, generally smaller companies, they've been just ripping to the upside. However, you are coming to the end of this run. So if we zoom out on this chart, in fact, I'm going to flip over to the weekly to show you guys a little bit more accurately here. Here's your weekly chart, and if we flip over to this, right, what do we have on in the midst of this, right? We have essentially a wedge pattern, or right here, and we're getting very close. So there is still a little bit more upside in the Russell, but you're starting to get close to resistance. I think it's around 189, so it's about $2 away on the IWM. Now, on the other side, the question I have is, we have a pivot low down here, which if we stretch to this, is now creating a secondary line. So again, do we hit here and check back down here? or do we hit here and break out, or do we hit here and then break down? And wedge patterns, again, when they're like this with two lines that are sloping up and down and meeting, right? Down and up sloping trend line, this is much more of a 50-50 play. What wasn't a 50-50 play, and I went into this in this game plan, is remember Bitcoin? Bitcoin had a flat top with an upsloping trend line. When you have a flat top and an upsloping, remember, this isn't flat top right here, then price tends to break out to the upside. Same thing for the downside. If you have a flat bottom and a trend line sloping down, what ends up usually happening? The flat bottom is the one that gets broken and you go to the downside. And when they're kind of both sloping, it's more of a 50-50, which makes sense, right? If this one's favoring the downside with the flat line on the bottom, this one's favoring the upside, flat time on the top. If both are angled, it's kind of evening itself out, and therefore it can be more of a 50-50. So we have to watch and see which way the Russell goes. I'm going to be honest, and you guys know this, I'm generally in the camp of skepticism, meaning that right now, the optimism in the markets is insanely high that the Fed is going to engineer some sort of a miraculous safe landing, even though they've raised interest rates at a velocity never before seen in history. And again, I'm just a doubter on this, and I think we will ultimately see a recession. The question is, how bad is it, and where is inflation? Because if inflation is still slightly elevated, let's say 3%, and by the way, we're right now still around 3.5% inflation. But if it's at 3% even, how much can the Fed really drop interest rates? I don't know. We'll find out. Okay, couple other things to go over. The 10-year yield here, guys. I just want to point this out. The 10-year yield continues to be under a little bit of pressure today, had a bounce yesterday. I find it a little interesting that the stock market is a little weaker today still. We'll see if that continues, but right now the stock market is a little bit weaker on the day. And again, my guess is, where are we headed? We're headed down to the 200 moving average, which interestingly enough, take a look at this, it has a convergence factor right here on the chart. There's a multi-trend line level right here, right? So again, we have this one here. In fact, I think there's even another one here, but let me see if I can zoom out and find that. But here, if we take this and we draw it from here to here, look at that. All right, that's cool. And this is, by the way, this is the stuff that I love, by the way. So you have a trend line, right, from down here that slopes all the way up under these lows that meets around 4%. Then you have a flat top right here to here, right through here, that meets around 4.1%. Right smack in the middle of that, what's that? The 200 moving average. And again, in other words, you basically have this, and again, we'll see where yields ultimately end, but between 4 and 4.1%, right? That, to me, is where yields on the 10-year are going. All right, now again, I don't know if it gets there before year end or in early January or in the next week. I mean, who knows? Timing is very hard to predict for any investor or trader. But the point being is that once we get here, I actually think the markets, again, become a heavy short, as we should get a very significant bounce, maybe back to 4.4, 4.5 on the 10-year, and that obviously will put pressure on the stock market again, as, again, markets will start to think a little bit less optimistic about rate cuts. And really, I mean, that's essentially what this is, right? You have a rubber band. People are saying, oh my God, rates are going up, it's getting stretched more and more and more and more, and then it snaps back, right? And it's like, okay, now it changed. Now it goes to the downside, and people are like, oh, now we're going to get tons of cuts. And to be honest, where is reality? And this is a great little thing, you know, when we live on social media with all the nut jobs out there and all the crazy conspiracies and all this other stuff, you know, the reality is probably somewhere in the middle, right? And it's a great way to look at it in terms of political stuff too, and that's where I am. I usually find myself somewhere in the middle of all this nonsense that goes on out there. I think you have the extremes here and I have the extremes here. The reality is somewhere in the middle. Same thing for the charts. Great way to kind of look at it like that. All right. Going into the dollar's actually showing a little relative strength here. It's upticking a little bit. One of the things I see on the US dollar is that this is your target zone. We're getting close there, but again, that could be why the markets are under just a little bit of pressure today. Lastly here, I just want to cover a couple other charts here in this game plan today. This is your chart of the Qs. The Qs again have hit resistance. I gave you this line when we were right up at this level. So again, you can see it has started to curl over. At a bare minimum, we still should fill this gap right here, just below 380. All right, now that's not much of a pullback, to be honest. It really isn't. But in terms of technicals, my job isn't to say, oh, well, I think it's going to cut right through here, and I think it's going to cut right through here, and it's going to cut through. No, as a technician, my job is to say, well, where's your next support? Well, it's right here. So now if it breaks that support, then I say, okay, where's your next support? Right there. Okay, if it breaks the support, here is your next one, right? And so investors tend to, and this is something we all have to correct in our mindsets, is that we tend to think about the narrative that we want it to achieve and say, oh, well, the Qs are going to go all the way down here in a month or two. In reality, that's our emotion, that's our bias. It's not helpful. It actually hurts you. You have to go level by level by level, right? Think about it in terms of a game or a race, a relay race. You go from here to here, and then you have to stop, and then you go from here to here, and so on and so forth. And I think that's important because what ends up happening is people end up saying, oh, well, I think the markets, and let's just go to a bigger time frame here on the S&P. Let's flip over to the S&P here. So in reality, right, I think that the S&P, right, and let's go to the monthly chart of the S&P. The S&P has gotten way ahead of itself from its longer term range, which is kind of along here, up here. Now, again, I could say, sure, I eventually think the S&P is going to come all the way down here, 2,700, maybe even go even lower to 1,800. But what I'm going to miss while I'm waiting for that to happen is literally tens of thousands of millions of dollars in potential profits, because you're going to get a ton of moves here, then here, then here, then here, then here, then here. And there's so many opportunities, like right at this low pivot. That low pivot is standing out as the October low from 2022, I believe. That will be a major technical level. So yes, do I think eventually the markets have to go back to their long-term trend? Yeah, but do you really want to be in a trade that you're stuck in for 3 years before that happens, or 2 years before it happens? I'd much rather be in and be out and be in and be out. This is how I trade crypto. This is how I trade stocks and commodities. And I make literally, it's always this commentary about like, oh, just buy and hold Bitcoin, right? You'll do fine. And the answer is that if you're in the real world, if you live in the real world, most people can't do that. They get flushed out on the weak bear market lows. They end up buying towards the highs, right? And in reality, you can make, and I do make, literally 10x, 5x, 100x more by swing trading this stuff using the charts. Now, it's not for everyone. You got to know what you're doing, but it's doable based on when you learn the charts. And I think that's really cool. All right, one thing I want to show you about today's price action, guys. This is the 10-minute chart of the S&P, or the spiders. Notice the range. This goes all the way back to mid-November. And this is a 10-minute chart in a very tight range. The reason why I'm pointing this out is that essentially you can watch for if this market is going to break down. When do you know it's breaking down? And yesterday we tested the low, and that's where we bounced. If the S&P starts trading down here, that is now a breakdown. If that happens, there's a gap fill down here around 440, right? I'll try to draw as straight a line as I can, but right there, that would be your target in the near term. All right, so again, if you can't see, there's a gap right here. We had a gap and then a huge, this is from here all the way up here. That was a huge gap. Gaps, by the way, are meant to be filled. So at some point, you're going to fill that gap. Whether it's today, next week, next month, next year, we have to find out. But ultimately, what I'm looking at is, here's a classic channel. Let's watch to see if we break it. Break point would be, looks like just below 455. So if we start trading and confirming below 455, I think, to be honest, it's game on for a move down to this 440 level. Now, again, we move back to 440 by, let's say, Christmas, then you could be setting up for that Santa Claus rally that takes us into year end, which again is partially due to light volume, and most people believe that that will happen. All right, couple other charts just to quickly go over here. I got a lot, but I'll do the best I can. Apple's chart. Here's your gap fill. We talked about this. Went up into it. It stalled out here. If it breaks this, you're going to go to your double top, which will be around 196. There's also the even number of 200. I continue to believe that when reality sets in that we're going to have a recession, this is one of the stocks that will get hurt the most. Now, you might say, oh, but it's a safety play. Well, you're right, it is. But it's also one of the most overloaded stocks in people's portfolios, in pension funds. It's so over allocated that any sort of weakness here could be very big trouble if everyone starts to try to get out. You could see literally 30-40% downside. And I also think that, you're looking at a company that has declining revenues now, and the market is in a mindset that Apple is just amazing and it's always going to be fine. But in reality, if their declining revenues continue, at some point valuation is going to suffer as well. So just a little note on that. Looking at NVIDIA here, this was a great trend line I gave to you guys here. Look at that, look at that, look at that. We said, look for a pullback right there, and that's exactly what we got. A couple other great calls from this game plan, guys, and there's been a lot lately, actually. If you're really paying attention, there's been a lot. Do you guys remember Dish? I talked about Dish. Take a look at this move. Here I even have the line still on the chart. There was your breakout right down here. I said, guys, if it breaks above here, you're going to get a move up. Look at how it broke above bull flag consolidation, and then it popped to $4. This was around what price was this? It broke out around $3.50, so $3.50 to $4 move beautifully right there. Another great one as well was this chart on LUV, Southwest Airlines. We talked about this level, this technical level. In fact, I saw some of your comments that you actually played this one, and you guys said thank you, and I appreciate that. Beautiful level right here, right? Pivot low. We had a double bottom. Remember, the thesis for this was just so clear, like so freaking clear. Like, that just drives me nuts how people just don't recognize it. This was your low during COVID, right here. Low during COVID. Think about this. This was the height of the low during COVID, when literally people couldn't leave their homes. They were scared to go on planes, and planes were canceling. Like, this was when essentially the world was ending, or so people thought. The price came back to that. So not only is it a technical double bottom, right, but it literally was back to a level where, like, the world was ending. And then ask yourself, is the world ending? And you say, wait a minute, all I'm hearing about is, soft landing and no landing at all. And hey, this is going to be great. So of course it's going to bounce. So I mean, literally it went from about $22 to $27 to $28 here. That is that's like 20+% gain on that beautiful little trade right there. So in any case, guys, this is what it's all about, just understanding charts. Remember, there's no perfect trade, all right? I was wrong on natural gas so far. I still am sticking with it. I'm dollar cost averaging, but I've been wrong on that. I'll be wrong on many, many other trades. That's part of it. The point is can I bat a simple 7 out of 10? That's all I want to do. I'm no hero. I just want to have a winning rate. Every 10 trades, 7 out of 10, I'm fine with that. I'll take that any day of the week, month, or year. All right, guys, back to the center screen here. This football is actually pretty hard, so I have to actually really be careful here because I don't want to hit one of our expensive cameras that's filming me. But I want to say this, continue to leave kind comments. It means the world to me, so I thank you so much for those. And I also thank you for spending 20 to 25 minutes with me every morning. I want to be a staple of people's worlds where they drink their coffee and view. And I want this to be where you guys feel comfortable that you're going to get good quality information. Obviously, it's not financial advice. You need to do your own research, but I hope you learn something each and every day, or I reinforce something. So let's give this a shot and see if I break anything. Have a great day, guys. Take care.
Do you have an existing IRA or retirement account? iTrust allows you to buy and sell crypto, gold, and silver all right within your IRA. And the best part is, they make it simple. All you have to do is transfer your preferable amount of USD through iTrust and then invest that into crypto or precious metals on the platform. To get access, use the link below to find out more about investing through iTrust Capital.